The bill is passed.
You guys, whenever a politician says that something is big and beautiful, it is time to start reading the fine print. And Trump's one big beautiful bill is a bill we have to look closer into because on the surface, it sounds awesome. It sounds like permanent tax cuts, a reduction in government spending, a focus on growth of the economy, and all of those things sound amazing until you realize that a lot of the changes are going to have negative impacts on mortgage interest rates. They could bring increase to mortgage insurance and overall impact affordability. Before you start saying, Lizzie, this is not a channel that focuses on politics, it does not. But trust me when I say this bill is going to have a lot of impact on your monthly payment, on your loans, and it isn't even a bill that directly is about housing. And so because of that, we are going to break this down in today's video. Before we do so, I do want to welcome you to the channel. Hello, my name is Lizy Hoeffer. I'm a residential loan officer here at Cross Country Mortgage, and I like to teach practical money tips so you guys can make informed housing decisions. So in my personal opinion, the One Big Beautiful Bill is just a power play to lock in the 2017 tax cuts. And it's also intended to slash funding for programs like Medicaid and the food voucher program. The kicker, guys, is it is massively expensive. We're talking about trillions with a T. And the government has to borrow money to pay for it. And when the government has to borrow money to pay for things like this big bill, it issues out treasury bonds. And this is like an IOU backed with a little bit of interest that investors love because it is backed and guaranteed by Uncle Sam, which means that they are for sure getting a return. When the government needs to fund things, they flood the market full of these treasury bonds, and investors, because there's only so much money to invest, will pull their money from other investments like mortgage-backed securities and invest in treasury bills, which sends mortgage rates up. This is how bills like this will impact the housing market and start messing with your mortgage. Now, what is so freaking confusing to me is that our president has been extremely vocal on the importance of dropping mortgage interest rates to help the overall consumers, to help the economy. And so bringing in this bill now, when he understands the impact of treasury yields to mortgage-backed securities, just seems very counterintuitive to all of the declarations he's made to Jerome Powell about dropping mortgage interest rates, dropping the Fed funds rate, his plea to Bill Pulte about, who is the FHA director, to drop interest rates. I mean, he understands that this is a big problem for Americans, and yet this bill will have a way more dramatic impact to mortgage rates than any change to the Fed funds rate. And for those of you who are confused about how the Fed funds rate impacts mortgage interest rates, this is always misleading in the media. The Fed funds rate is the rate that the Fed establishes for overnight borrowing from banks to banks. It has an indirect correlation to mortgages and just overall lending because it makes lending a lot cheaper for banks. And so when you bring down the costs of business, banking, and lending, overall it gets passed on to the consumers. But it is very indirect. It's also very slow. Mortgage-backed securities are more heavily impacted to treasury yields, specifically the 10-year treasury bond. When you flood the market full of treasury bonds, you also increase the yield, meaning the interest that's paid back to investors. So no matter what is done with the Fed funds rate, it's nothing in comparison to the amount of bonds that will flood the market due to this one big beautiful bill. You can tell I'm really frustrated at the thought of higher mortgage interest rates. I just don't think our economy can handle it. I don't think consumers can handle it. There are also changes to FHA loans that they're talking about. They're talking about increasing the mortgage insurance premium. So this is the upfront and the monthly premiums, and adding risk-based pricing to FHA loans. Look, you guys, FHA loans are great loans. They're backed by the government. They make it more affordable for people to buy homes with as little as 3.5% down. And any changes to this coupled with the higher interest rates just seems so counterintuitive and is going to yet further delay when somebody can purchase a house. We're talking about $50 to $100 a month, which may not seem like a lot, but when you're talking about the 7% interest rate, an additional $100, you're going to take out even more buyers from this housing equation. And we already have 3 to 6 million people who cannot afford to buy a home in this environment, whose retirements are being delayed because of all of these changes and these super high interest rates that were a result of all of the COVID agendas. This is just Oh, it is so maddening. I just really do not understand this. Now, I'm not saying that there isn't a need for stricter guidelines when it comes to lending. There are a lot of defaulted government loans, and I do understand that, yes, when there's higher risk, sure, there should be an adjustment to interest rates, maybe a cap on debt to income ratios. We're doing this at a time when interest rates are at an all-time high. Like, this is just not the time to make that change. Let's say interest rates come down and you want to revisit how these are underwritten. Sure. When interest rates are in the sevens and tacking on an extra $50 to $100, it just seems so counterintuitive to the housing problem that we have today. Now, crazy headlines with Elon Musk that everything has to contend with. You guys, frustrated does not even cover how I feel about this bill. While it doesn't have any real specifics about housing, it has major implications to housing affordability. In my personal opinion, this is just more spending. It's just more chaos to the market. And it should have addressed things like tax cuts for people that are giving up their low interest rates. It should have addressed building, because believe it or not, even though we have very low transactions and there's rising inventory, when buyers are able to re-enter the housing market, we will be short 4 to 5 million homes. There was no effort made to create more affordable housing options or entry-level housing. These are real issues that impact everyday consumers, not just the wealthiest of Americans and business owners. I don't want people to panic because there have been no changes to roll out. Like, if you are looking for an FHA loan, there have been no changes. These are just the things that they're discussing behind the scenes that have grabbed my attention because I believe it will impact affordability. So I just want you to know there is a lot that goes into politics. If you're watching this video thinking, gosh, I'm just gonna wait for things to get easier, I don't know what to tell you. For the last couple of years, we've been waiting for things to get easier and they just haven't. And home prices have remained stable despite rising inventory, despite the higher rates, because life happens and people still need to move and buy real estate. And so if you need the space, if you're looking for the equity, if you are looking for a home, this might be the best time to buy, because whenever there's chaos, there's also deals. There are lots of people who decide to wait, and a lot more motivation enters into the market if you are a seller. Real estate is always a long-term investment meant to be bought and held for an extended period of time. It's supposed to give you a place to live and a place to grow equity for your retirement. So I don't think this frustration will last forever. I do think it's temporary. I do think it's right now. And hopefully that leads to you getting a great deal in price, a great deal in closing costs, a great deal in repairs that you would normally have had to come out of pocket for. If you found this video to be helpful, you guys, it would mean the world to me if you liked, comment, and subscribe to the channel and forwarded this on to a friend. If you're looking to find out how this market impacts you as a homeowner and want to set up a consultation with my team, all of the contact information is below, and we would be honored to serve you. Until next time, let me know what you think in the comments below.